Ever wonder why so many smart, motivated people just fail at trading? Is it because their strategy is bad? Is it the market's fault? Well, according to author Mark Douglas, the real answer is a whole lot closer to home. In this explainer, we are diving deep into his classic book, The Disciplined Trader, to find out where the real battle for success is actually won and lost.
So Mark Douglas just throws this number out there right at the beginning, and it's a real shocker for most people. He argues that this much of a trader's success or failure comes down to one thing. And get this, it has almost nothing to do with the charts, the indicators, or the strategies that everyone obsesses over.
Yep, you heard that right. He says trading success is 80% psychological and only 20% about your method. Just think about that. 4/5 of this entire game is played inside your own mind. It means a trader who gets their head right, even with a pretty average system, is going to beat the genius with the perfect system who hasn't mastered their psychology. Understanding this one idea, well, it changes everything.
So you might be wondering, where does he get this crazy 80% number from? Well, like a lot of the best teachers, he learned it the absolute hardest way possible. It was his own story of a spectacular, catastrophic failure that forced him to see this psychological truth.
I mean, look at this timeline. The speed of this rise and fall is just staggering. In '81, Douglas is doing great in a totally different field. By March of '82, he's at Merrill Lynch in the thick of the trading world. Within just a few months, he is living the absolute dream. We're talking an expensive apartment, a Porsche, flying to see his girlfriend every single weekend. He was on top of the world. And then, just like that, it all vanished. He lost it all.
And this quote, man, it just hits you. This is him at absolute rock bottom. It wasn't just losing the money. It was facing what he saw as the ultimate personal failure. But it was right there, in that moment of complete financial ruin, that the biggest insight of his entire career started to form.
And this was the light bulb moment. He finally realized that the market wasn't the enemy. The one single constant in every one of his disastrous trades was him. His own internal world, his beliefs, his fears, his ego, that was where the real problem was.
Okay, so if the problem is all in our heads, that begs a huge question. Why is trading so uniquely difficult for our brains? I mean, why do really smart people make the same totally irrational mistakes over and over again the second they sit in front of the charts?
Well, the problem is a fundamental mismatch. It's like we've been training our whole lives to play soccer. Rules, boundaries, a referee, and then suddenly we're dropped onto a basketball court with no rules at all. Society is structured. There are rules, there are consequences. You work hard, you get a promotion. But the market? Douglas calls it an alien environment for a reason. It has none of that. It is completely unstructured, with absolute freedom and zero external discipline. And this is so important. In an environment with total freedom, you are totally responsible. There's no boss to tell you to stop, no safety net to catch you. You have to provide all the structure, all the rules, all the discipline from the inside. And that is a psychological muscle that most of us have never ever had to develop before.
So what do you think happens when you take a brain that's been conditioned its whole life for that structured world and you just drop it into the unstructured chaos of the market? You get a perfect recipe for psychological self-sabotage. I mean, just look at this list. Does any of this hit a little too close to home? These are the classic, painful mistakes that come directly from that psychological mismatch we were talking about. Refusing to take a loss, that's really just about refusing to admit you're wrong. Revenge trading, that's you trying to punish something that doesn't even know you exist. These aren't analytical errors, you see. They are emotional, psychological meltdowns.
And here it is, the absolute kicker. This is the core paradox of trading psychology. The very mental tools that make you successful out there in the real world, having a strong opinion, being persistent, fighting for what you believe in, those are often the exact things that will absolutely demolish your account in the markets. Your own brain becomes your biggest opponent.
Okay, so we get it. Our old way of thinking is the problem. Our brains are working against us. So, what's the solution? Well, Douglas proposes a whole new thinking methodology, and it all starts with accepting one of the most difficult, most ego-crushing concepts in all of trading.
Let that sink in for a second. This idea is so powerful.
The market isn't right like it's morally correct. It's right because it's the ultimate reality. It doesn't care about your analysis, it doesn't care about your reasons, and it definitely doesn't care what you think should be happening. Arguing with the market is like arguing with an earthquake. It just is.
And here's why the market is always right. That price you see flickering on your screen, that's not just some random number. It's the combined consensus belief of every single person in the market at that exact moment. Your brilliant reason for buying or selling is just a whisper in a hurricane of collective opinion.
Okay, so we've diagnosed the core psychological problem. We understand the huge mindset shift we need to make. So now, for the good part. What are the actionable steps? How do we actually build the mindset of a winning trader?
This right here, this is the destination. This is the promised land. The ultimate goal is to get to a point where you can execute your trading plan perfectly without that knot of fear in your stomach, without that voice of doubt in your head, and without freezing up when your system says go. It's about becoming a flawless executor of your strategy, not its emotional victim.
So how do we get there? Well, it really boils down to these 4 pillars. First up, deal with losses. You have to completely reframe what a loss is. It's not failure. It's not a reflection on you. It is just a business expense, like paying rent. Second, execute flawlessly. Your only job when the market is open is to follow your rules. No exceptions, no second guessing. Third, and this one is huge, think in probabilities. A casino doesn't sweat one hand of blackjack, right? They know they have an edge over thousands of hands. That's how you need to think. And finally, the big one, assume responsibility. The market didn't take your money, your actions led to the result. You can't control the market, but you can always control yourself.
So we're going to end on this question. This is really what the entire book boils down to. It's not about blaming yourself, it's about empowering yourself. Because the exact moment you accept 100% responsibility for every single one of your outcomes is the exact moment you gain 100% of the power to change them. And that right there is the final and most important step in winning the mental game.